Hello everyone, today I'm going to discuss on investing in Singapore stock market versus US stock market. I will touch on the pros and cons of each market and also share my thoughts and preference towards the end of the video. But before that, I hope you can like and subscribe to help with the YouTube algorithm as I wish to grow the channel more. Your little support means a lot to me. First up, let's talk about Singapore stock market and dive straight into the pros of the market. Currency risk. When we invest in Singapore stock market, we need not have to worry about forex or currency risk as the money used to invest is in Singapore dollars. Let me give you a simple example. If you invest in the US stock market and your gain is 10% this year, but say Singapore dollar appreciates against US dollar, then your actual gain may not be 10%. A look at the currency exchange rate over the last 20 years seems to suggest so. Back in 2003, one US dollar was able to give you 1.71 Singapore dollars. But as of today, one USD can only fetch you 1.35 Singapore dollars. A 36 cents difference may not seem a lot, but if you multiply it by 10,000 or 20,000, it will be quite significant, as you will be losing thousands of dollars. Next, the most common advice people give you when it comes to investing is to invest in good companies that you are familiar with. Warren Buffett once advised investors to never invest in a business you cannot understand. So when it comes to familiarity, we will naturally look at brands around us where we have first-hand experience with or we grew up with, such as DBS, Singtel, CapitaLand, etc. These are all household brands that every Singaporean would know, as we use their products or services almost on daily basis, which makes it easier to understand their core businesses and performances. And that definitely gives us some vote of confidence to invest in them. Finally, investors of Singapore listed stocks are not taxed on their dividends gain. For instance, you invest in DBS and Bank of America, and both give out dividends. For the latter, you will be charged a 30% withholding tax on all dividends paid out to you. To put it simply, every $10 that you receive as dividend, $3 has to go back to the US government. So this can dampen your overall investment returns. Moving on, let's look at the downside of investing in Singapore stock market. The first con that came to my mind is that I need to buy a minimum of 100 shares, while in the US market, you are allowed to purchase only one stock. The second downside is its limited growth and opportunity. I feel that the Singapore stock market is shrinking and does not generate much returns and growth for my investment portfolio. Yes, there are many good companies in Singapore who are doing well in the country, but their upside is quite limited in my opinion given the small market. Take for example, a US company starting out in a small city can expand into various cities and states of US before being forced to expand overseas. But in Singapore, the company can only expand from Pasir Ris to Jurong. Also, when you look at our population versus US population, say a company captures 20% market share in Singapore vis-a-vis 20% in the US, you do the math, the difference is massive. Though some may argue that the top Singapore companies have businesses in other countries and regions as well. That is correct, but their execution and growth still cannot compete with the top US giants yet, which I will elaborate more later. To add on, some local brands such as OSIM, Grab and Sea prefer listing their company in US or Hong Kong stock markets, further reducing the potential of Singapore market. Now let's take a look at the pros and cons of US stock market. Just to write on to the previous point, the first advantage of investing in US market is that top few US companies generally have very high growth potential. For example, companies like Apple and Google and Tesla are able to expand and reach far more people with their world-class executions. They are almost dominating the world and are so influential to people's lives. So, when there is more growth for a company, it naturally means more profits for them and potential high returns for the stock. Next, US stock market offers option tradings which Singapore market doesn't give. For experienced investors or traders, option trading can generate steady monthly cash flow for them on top of their buy and hold portfolio and daily job. The next good thing about investing in US market is because everyone is investing in it. Just kidding. Okay, investing in US market shouldn't be a case of FOMO. The point here is when almost the entire world has a stake in the US market, It means the volume and liquidity is high, and that's a good thing. Don't understand? Okay, to put it simply, in a liquid market, when you want to sell a stock, you will be able to quickly find a buyer without having to cut the price of the stock to make it attractive. In other words, you will less likely meet those low ballers you saw on Carousel. Yeah, just check this out. You won't want to face such scenarios, and you will not be like this. Okay, here are the downside of US stock market. Risk. Yes, the risk is definitely higher than Singapore stock market. Look at the volatility swing in the first quarter of this year. It was wild and crazy. I mean, you have the Federal Reserve non-stop meetings talking about inflation, interest rate hikes, reducing balance sheet, etc., and the ongoing war. All these have caused the market to move up and down rapidly. To add on, the US market is watched and invested by many people in the world, so a lot of world events and macro factors can affect the market movements. And when the companies you are invested in are thousands of miles away from your home country, you really do not know what's brewing there. I think the collapse of Lehman Brothers is one example. I mean, who would have thought that an investment bank with more than 100 years of history would go bankrupt? The other cons of investing in US market are 30% tax on dividends received, which was covered earlier on, as well as the trading hours. Due to the difference in time zone, I often find myself up awake till 1 AM or sometimes even 2 AM if there are key reports or meetings happening, or if I need to take certain actions for my portfolio. I think there is no right or wrong as to which stock market to invest in or which one is better. At the end of the day, it depends on individuals' preference, investment plan, risk tolerance, and other factors. But a quick thought would be, why not invest in both, right? I mean, as consumers, we are already buying products and services from both local and overseas brands. We love Grab, we love DBS, and we love Shopee. But at the same time, we also shop on Amazon, we buy Apple products, and Tesla is gaining traction here in Singapore. We also subscribe to Netflix and Spotify. So can we say that we are only familiar with local brands? Not really. And if that's the case, why should we then restrict our investment options to just Singapore-listed companies when some of the world's largest and most successful companies are listed in the US? Depending on your risk tolerance, you can allocate different percentages to the various companies based on your comfort level. Another thing to note, many of us work for Singapore-based companies and our savings are held in Singapore banks. And our assets are in Singapore too. So if there is a huge recession in Singapore, this Singapore first or Singapore only portfolio may tank by a lot compared to a slightly more globally diversified portfolio. Personally, I skip the whole idea of investing in the Singapore stock market. My case for going global or US is really because I believe that money is there to be made outside of Singapore, as the potential of returns is much higher and I am willing to take on higher risk. That being said, the irony thing is, I am actually quite risk adverse as I don't hold speculative stocks like Palantir, Teladoc, etc. At the end of the day, I really feel that investment is about risk management and more importantly, know what you are doing. By doing so, the risk can be significantly lower to a negligible level. But of course, if you do not have the time to explore or research, feel free to start your investment journey with Singapore stocks just to have a sensing of investing. You can always buy into familiar brands like DBS, CapitaLand, or even Sheng Siong and Raffles Medical Group, or the STI ETF, and then level up by venturing into other stock markets when you are more ready. Alright, that's all for this video. Are you invested in Singapore or US stock market, or both? Let me know in the comments section below. Lastly, thanks for watching my video. Hope you can like, share and subscribe to my channel to show a little support. Thank you.